Welcome back. We are here on eToro looking at the commodities market and the precious metals market. And this is going to be my daily forecast for Monday, December 28th, 2020. We're getting to the end of the year, and usually that is a very volatile period. And it will be very interesting what happens when the market opens because everybody that's been paying attention to Bitcoin, it has basically been parabolical. Now the market has basically been closed. It has risen program past 25,000, 26,000, 27,000, and also 28,000. And on our screen here, we have the US dollar index. And usually the US dollar trades opposite of Bitcoin. So when Bitcoin rallies significantly, that usually is an indication that the US dollar will start depreciating. So it'll be really interesting to basically see what happens to the US dollar when it starts trading. So I expect a pullback. These technical indicators here are all set up for a major pullback in basically Bitcoin, a US dollar. You can see the CCI is turning around. The stochastic is basically becoming flat. So is the MACD. And we also tested the 20 exponential basically 1 week ago. So, and we got basically, we touched it and then we basically got sold into oblivion. So at this point, I think that we are just going to see more of the same. That is basically rally up towards the 20 exponential, breakdown, rally, and then breakdown. So if we take out this lower candlestick here at roughly 89.64, that opens the door to much lower levels. And that is important because commodities, precious metals, indices, stocks usually trade opposite of the US dollar index. So if this starts depreciating, then we may see major rallies in commodities, precious metals, and so on and so on. So let's look at oil. So before we start, if you want to support the channel, you're welcome to hit the subscribe button down in the corner, hit the like button and the bell button to see our newest videos. And if you want access to our full technical analysis, our signal service, and our online trades and courses, you're welcome to join us over at Patreon. The link is down below. So we are trading at the moment at 48.26, and we are only roughly $2 away from major resistance. So 50 is where I think most sellers will come in and basically sell this significantly lower. We may get to 51. We may often it basically overshoots if we get a really nice rally here. But at this point, world economy is still severely weakened by the coronavirus, especially in Europe, especially in the United States. And that usually means that there is much less demand for oil in the market, and therefore prices should basically go down. But 50 will be a major test. If that breaks, then we are going significantly higher. We're going to 55, we're also going to 60. But 50 is going to be major test for this market. If we break down from here, the first target here would be the 20 exponential, which is 46.5 at this current stage, and then the 50 moving average all the way down to 42.96 at this current stage. So 33 roughly there, and that would basically be coinciding with the previous highs here. If we look at the Fibonacci retracement, for example, for oil market, and let's just say that we are going to 50, then we will take the lows here to the very highs of 50. And what we will see basically that the first Fibonacci retracement is roughly here at 43.887. And those are exactly the previous highs over here. So it would make sense that if we get to the 50 and we start breaking down, that we'll head towards this level. If this breaks, then we have the 50 moving average right underneath, which will be supportive. And then we have the 50 Fibonacci retracement at the 41.87. And after that, we have all the way down here to 40. That is the 61.8 Fibonacci retracement. A break of this level here almost guarantees retest of these very lows. But we'll see basically what happens. First of all, we need a pullback, a fairly major pullback from or rejection at the 50 level in order to determine whether or not we are going lower in this market. So let's look at natural gas. So it is just a continuation of the same over and over again. I think at this moment it is almost inevitable that we are going all the way down towards 200 moving average. That is at 2.2775. So we have been breaking down, rallying towards the 20 exponential, breaking down, rally to the 20, breakdown, rally to the 20, and now we have another breakdown. So if you manage to take out these lower candlesticks here, that opens the door to the 200 moving average. I think there's going to be a massive amount of buying here. If the 200 moving average breaks, then we are going significantly lower. But this is where I will be interested in basically starting buying into this. And the first target will be the 20 exponential at 2.6, the 50 exponential at the 2.8, and probably all the way up to 3.3. That is very optimistic, but it could happen. This market usually, when temperatures change and so on, it usually rallies significantly. We just see what happened back in 2018 and 2019, where we had this massive rally and decline. So at this point, I'm just waiting until we basically get towards the 200 moving average in order to determine whether or not this is going to be the turnaround in this market. So let's look at copper. As you can see, we are trading at 3.568. The 20 exponential moving average was supported again. It has been supported for a very long time. And if it doesn't support, then the 50 will. At this point, technical indicators are turning around. And if we will see a depreciation of the US dollar, a continuation of that, that will just increase the value of this commodity. At this point, I have really no interest in basically buying into this. If you wanted to enter this, you should have entered it here. And the target is not that high. It is basically 3.6363. So the highs of this. If that breaks, then we are most likely going to 3.7. If we break below the 20 exponential, then we'll probably head towards the 50, and that it will be an even better buying opportunity. So let's look at gold. So because Bitcoin has rallied so significantly, and the reason why Bitcoin is rallying so significantly is because people are using it as a safe haven. You're not seeing the same rally in the other cryptocurrencies. It's not like people are gathering around and basically pumping all the other cryptocurrencies. It's basically just Bitcoin at this stage. Ethereum a little bit, but mainly Bitcoin that is going absolutely bananas at this point. So people are using it as a safe haven as they usually do when economies are expected to decline. They go to gold, but at this point, gold and silver, but they also go at this point to Bitcoin. So we could expect a major rally in basically in gold when the market opens again. So we need to get through this resistant line. We have tested it basically 3 times. We have been rejected, and we have a support line underneath here, which we most likely at this point will not get to. If the US dollar starts depreciating significantly, if we now manage to take out this line here, then we're heading to, first of all, 1900 will be broken. Then we're heading to 1950, 2000, 2050, 2100, and then beyond that. In the long run, gold will go significantly higher, similar to Bitcoin, because people are putting basically their money into a safe haven like gold and to Bitcoin at this, strangely enough. But that is what the market is basically indicating at this point. So if we break down from here, 50 moving average will be supportive, the 20 will be supportive, 200 will definitely be supported. I don't think that we'll get there at this point if we have a significant decrease in the US dollar index. Otherwise, I was expecting this to travel in between this support and resistance line and then break out when we got closer to this corner. But that breakout may happen, well, this week. So let's look at silver. So usually it's basically silver that follows gold, but at this point it is gold that is following silver. So silver broke out of its this resistance line, well, several trading days ago. We rallied all the way up towards its 27.35 and then broke down towards the 20 exponential and then rallied again. At this point, this trend line here, which is very steep, is basically our support line. So this line here. So every time we get close to this support line here, it's basically an expectation of a rally. There's going to be a massive resistance above here. So this area of roughly $27 will be a major obstacle for this for silver. If we manage to get through here, then we're heading all the way up to $30. That is how I see it. Pullbacks towards this trend line here is a major buying opportunity at this point. So let's look at platinum. So we broke down quite substantially all the way down to 900 and roughly 73 and then rallied. At the moment, we're trading above the 20 exponential. We are about to test these previous highs again of 1057 and then probably all the way up to 1078. If we manage to take out that, then we are going significantly higher. We haven't got it on this chart, but you can look at the 4-hour chart. The next target here will be 1185. That is basically the next target for this commodity. No one's just basically shorting this. That every single time we get close to the 20 exponential at this point, that is basically a major buying opportunity. It is probably still possible to enter this trade in order to buy with a stop loss right underneath the 20 exponential moving average. So let's look at Palladium. This has been probably the most boring commodity to trade for a very long time because nothing really happens here. So we have been stuck at the 20 or 50 moving average for a very long time, and which is right in the middle of the major resistance line and the major support line. So I tend to stay far away from things that are basically trading in between major resistance and major support. However, we may have a breakout here. If you look at this as a triangle, for example here, then we are probably trading into this corner, and when we get there, we'll see an action to the downside, an action to the upside. But at this point, it is fairly difficult to say where it is going because these technical indicators are all fairly flat. So it's just a complete gamble of basically seeing where we are basically going. A better trade, or just to wait, is to wait for this to go all the way up towards the major resistance line, and if it turns around there, then you can basically sell it. And if you go all the way down to the support line and it turns around there, you can basically buy it. That is probably the best thing to do at this point. We're just trading up and down in between this area sideways. So hope you find this helpful. You're welcome to support our channel by subscribing, hit the like button and the bell button to see our newest videos, and you're welcome to join us over at Patreon. The link is down below. Good luck and thank you very much.